Hello investors, welcome back to the channel. So in today's video, we're going to be talking about my top 20 dividend stocks that I'm going to be adding to the portfolio for 2020. So these are all dividend stocks that I'm either already holding or new stocks that I'm adding to the portfolio with new pies. You guys are going to see one of my new slices in the pie, and that's going to be the defense pie that I have made. And I'm also going to be adding some pharmaceutical stocks and some other companies, some REITs as well. So let's get into it. As you guys can see, I've actually added some money in the past week or two. I added some money in here so I can invest some more into the dividends, and I'm going to be adding a lot more, throughout this year. Every month, I'm going to be doing a certain amount and just keep on investing. As you guys can see, my gain right there, it says $710.99, which is a return of about 14%. And this portfolio hasn't even been up for like what, 8 months maybe. If you check out right there, earned dividends, I've earned about $111.10 in dividends. The rest is all from gains from the market. Okay, so before we get into the video, guys, go ahead and smash that like button for me. Let's get over 100 likes for this video. It helps the algorithm, helps my video and my channel grow. Make sure you subscribe to the channel so you guys stay tuned for every upload that I make. Plus, once we hit 5,000 subscribers, I'm going to be doing that giveaway, so that this will be your chance to join the giveaway. Also, leave a comment below how much you earned the dividends in 2019, and just let me know what you guys think about the dividend stocks that I have added to my portfolio in this video. Okay, guys, so as you guys can see right here, I added this new pie, and this is all defense stocks pretty much. So I added a ticker symbol LMT, which is Lockheed Martin. I have NOC, and I have RTN. All three of these are the defense stocks, but I invested more in one than the other, which is Lockheed Martin. I invested double what I did in the other ones because I believe in that one more than the other two. And it's just a bigger company in my opinion. Okay, guys, so this is the pie. This is the defense sector that I have right here. We have a total value of $514 invested. It's already up almost 3%, and it's only been about 10 days since I made this pie. The first one we have right there is going to be LMT, Lockheed Martin. So Lockheed Martin right here, we have 0.6 shares. We bought $250 worth at an average share price of $410. And right now it's trading at $425.66. And then if we check out the details right here, the market cap is 120 billion, PE ratio of 19.9 with a dividend of 2.26%. If we look at the 1-year chart, I mean, look at that beautiful growth. It's went up from about $280, currently trading at over $400. It's had nice run-ups, throughout the year. It pays that quarterly dividend right there every 3 months quarterly, so $2.40 each quarter, and it adds up. The next stock in the defense portfolio is going to be the Raytheon, ticker symbol RTN, I believe. And this one, we have about 0.55 shares. Average cost of $125, or that's how much we invested, and the average share price is $224.98. Currently, it's trading at $231. So this one has a 64.8 billion market cap, PE ratio of 19.4, and then a dividend yield of 1.62%. If we take a look at the 1-year chart, also obviously it's a quarterly paying dividend of 94 cents. Same kind of pattern. It kind of consolidated here for like 3 or 4 months, maybe longer, but then once September hit, it kind of had another run up, and same thing happened here at the end of the year actually. So this one has a little bit lower dividend than previous one, but it's still a very, very valued company for me. Okay, so the third one that we added to the portfolio right here is I bought 0.33 shares for $125. Our average share price is $375.02. Currently, it's trading at $379.97. The market cap for this one is 64.3 billion with a PE ratio of 21.2 and a dividend of 1.38%. So this one has the lowest dividend, but I still have it in the portfolio, obviously. And then on the 1-year chart, pretty much all three of these have been doing the same. Maybe this one and Lockheed Martin are a little bit better, chart-wise when you look at it, but it also pays a quarterly dividend of 1.2, so $1.20 right there, as you can see, every 3 months. Beautiful. Okay, so now from now on, these are actually all going to be stocks that I have just added to the portfolio. Added more to my position. So I own every single one of these. I believe there's like 17 of them on this list. So these are all stocks that I already own, but I'm adding more to my position. And I'm going to, basically, these are all adding, the reason I'm adding all of these is because of growth or dividend growth as well. As you guys will tell on the third one right here, Realty Income, I'm going to be showing you guys actually another page where it's actually increased their dividend for like 105th time, I believe, in a row. But I'm going to be going over why I believe most of these are good. I'm going to be showing you guys the charts on these and just my opinion on what I see. So let's get into the first one. It's going to be Walmart. As you guys can see, Walmart, I added about $25 to my position to it. Okay, so Walmart, as you guys can see, I have about $320 worth in total with a gain of $25.32. My return is over 9.5% almost. I pretty much own 2.78 shares of Walmart, and my cost average share price actually is $106.85. Currently, it's trading at $114.96. Let's view the details on this one actually for the 1 year chart. 1 year chart, I mean, how could you not buy this? You know, right here, we had a very nice spike from about $100 to about 114 where it's at right now. I know it's been kind of consolidating right here and going sideways, kind of hitting an all-time high, but then going back down. But you know, it's a beautiful stock in my opinion. It pays a quarterly dividend of about 53 cents or 1.83%. And in my opinion, Walmart, you know, they have a lot of growth. You know, Walmart's not going anywhere. It's one of the biggest companies out there. Um, you know, this is in my consumer pie, and I think Walmart is just a very, very decent company. And if you guys disagree with any of my picks here, you guys can leave a comment below. I'm willing to discuss everything with you guys and see your guys' opinion. Everybody has their opinion. I'm just showing you guys what I have added to the portfolio, and, you know, just giving you a little reason on why, and just showing you guys the charts. Next up, we added Pfizer. So let me show you why I added $50 worth of Pfizer. So actually, with Pfizer, that is one of my only stocks in the portfolio that I'm actually doing negative on. I'm down about 1.79% or $3.27. So let's check it out. So Pfizer right here, let's take a look at it right here. Okay, so we own about 6.2 shares of it, and we have an average price of $41.52, and currently it's trading at $40.51. So let's take a look at this chart. So, you know, it was pretty high here at about 44, and I believe this is around the price where I bought previously, and that is why it kind of took a huge dip here from about $43 all the way down to $34, $35. Obviously, I didn't sell because I'm holding this for the long term. It has a very, very beautiful dividend, as you guys can see right here, 3.74% dividend. Even though I took a huge loss right here, you know, that's what, about a $7 or $8 drop. Well, I knew that the stock is going to go back up over time. Now, my only regret is not buying around this area probably in October. I wish I would have done that about, you know, $34, $35. Well, instead, I bought pretty much around here, which was about almost $40, so where it's at right now. But the good thing is it brought my average down. So since I added more to the portfolio, my average price is going to go down. So that means once it recovers back to that 42, 43 area, I'm actually going to be in the profit. And then all of my stocks in my portfolio are going to be in the green. Next up, we added Realty Income. So this is the one I wanted to talk about. This is one of the big ones that I really wanted to talk about. So I added $50. I actually wish I would have added more. I don't know why I only added $50 to my position, but if we take a look right here, I own almost 5 shares of it at an average share price of $72.82, and currently it's trading at $76.35. If we take a look at the 1 year chart on this one, you know, it was down about $64, and look at this nice run from about $68, $69 all the way up to an all-time high of about $81, $82. And if you guys follow my videos in the past few months, I've been saying, look at this dividend, 3.59%. That's beautiful, right? It had this nice run up, and I wanted to buy more, but it was at an all-time high. So I said, well, I'm going to wait for a pullback and see what happens. It pulled back down, and it kept pulling down up to down to about $71. And once again, just like with Pfizer, I wish I would have added to my position here. So my price is kind of, you know, I bought in a lower price than this, you know, all-time high. So now when it runs back up and goes to the all-time high, I'm going to be making even more profits with the new shares that I bought and my old shares, obviously, that I had. Now, if we take a look right here, Realty Income hikes monthly dividend for 105th time. So the 105th time they hiked it up. So as you guys can see, recently announced its 105th common stock monthly dividend hike since the company's listing in 1994. The company will now pay 23.25 cents per share compared with the 22.75 cents paid earlier. This marks 3.1% growth compared to February 2019 payment. Now, this is really beautiful. This will be paid out on February 14th to shareholders on record as of February 3rd, 2020. The latest dividend rate marks an annualized amount of $2.79 per share versus the prior rate of $2.73 per share. So that's a 6 cents increase based on the company's share price of 74.96 cents on January 14th. it's result in a dividend yield of around 3.72%, like we kind of said earlier. So, this is a very, very solid REIT. One of the REITs, I actually own 3 REITs in my portfolio. Investors love Realty Income. It remains, one of the best REITs out there right now to hold. And as you guys can see it right here, it remains committed to boosting shareholders' wealth. The company enjoys a trademark of the phrase "the monthly dividend company." They are one of my favorite monthly dividend companies that I own in my portfolio. And as it says right there, the latest hikes come by a marginal figure from the prior dividend paid, but marks the company's 595th consecutive monthly dividend payment throughout its 51-year operating history. So that means that it's paid, consecutively for 595 times in the past 51 years. And as you can see right there, in fact, this retail REIT has witnessed compounding average annual dividend growth of around 4.6% since its listing. Now, that is also amazing. This is a very, very beautiful company for me. And actually, if you guys follow Zach's rankings, he has it as a number 3, so that is a hold. He only recommends the ones that's a buy or stronger, but I really love Realty Income, and I think right now is a great time, and that's why I added to my portfolio. Or I added more to my portfolio is what I mean, to get it at a lower price. And I kind of wish it would go lower so I can get some more. Okay, next up, this is a brand new one to the portfolio. So this is a new stock that I have added. It's going to be in my health sector, and it's going to be ticker symbol CVS. So it's CVS Health Corporation. I added $150 to the portfolio worth. So this one, I bought $150, like I said, worth, and it's already up about 5% almost in the past week. I bought about 2 shares, average share price of $72.56. Currently it's trading at $76.02. And CVS has a market cap of 99.1 billion, PE ratio of 21.7, and a dividend yield, a very nice dividend yield, about 2.63%. I love that. That's very, very beautiful in my opinion. As you guys can see, it's a quarterly paying dividend right there. The stock had a rough, shaky beginning of the year last year. It kind of went down a lot, about what, $10, $15 right there drop. But then it kind of recovered over the year, and I kind of wish I would have added this one to the portfolio a lot sooner. I don't know what I was waiting for, but right now it's at a very expensive price, but I still wanted to add it to the portfolio because I believe in this company. Healthcare is huge, and CVS has a lot of, stuff coming up in the future. So one of my favorite ones that I added to the portfolio this time. Next up, we added SPHD. We already had SPHD. It's a S&P 500 high dividend, low volatility ETF. And SPHD, I think I'm going to be adding that every month because this just follows the market. Whatever the S&P 500 does, pretty much, it's going to go up, it's going to go down. That's why I added so much to that position. I added $200 worth because that is just following the market. So no matter what happens, if the market goes up or the market goes down, I'm going to be adding to my position on this one. So as you guys can see, I own about 12.8 shares of this one. Average share price $42.10. Currently trading at $44.35. And then if we take a look right here, expense ratio pretty low, 0.3%. Dividend yield of 4.05%. That is beautiful. 4% dividend on this one. That is amazing in my opinion. As you guys know, this pays a monthly dividend, so every month I'm getting dividends that I can go ahead and drip and then reinvest back into my portfolio. It pays out 15 cents every month. And the stock is kind of, it's went up, it's went down a couple times. It's had its ups and downs. But ever since about October, it's been on the run up. And right now, the stock market is doing very beautiful. So we're on a continuously going up right now very nicely. The market is doing very great. We're at hitting all-time highs every day. S&P 500, everything, the Dow Jones. The market is doing very beautifully, and I believe in my opinion that this bull run is going to continue, and we're going to just keep on hitting all-time highs even higher. You guys know the trade deal with China has been going on and all those other impacts. Next up, I added a Pepsi, ticker symbol PEP. Pepsi, obviously, I already owned in my portfolio, so I only added about $25 worth to the portfolio. This one, obviously, I own about 1.6 shares. Average share price $131.97. Currently trading at $141.26. Pepsi, beautiful stock once again. Market cap of almost 200 billion. PE ratio about 15, and the dividend is 2.74%. The stock has gone up from about $110 to currently $141, so 27.82% gain in the past year. It's been on a run up. Kind of right now, it's finding a consolidation area right now, but I feel like it's going to break out, and we're going to continue it up. It's a quarterly paying dividend of 93 cents, 96 cents right now. Actually, it's increased, so that's beautiful once again. I added up some of these. I'm only adding a little bit, but it's all worth it because you gain more dividends that you can keep on reinvesting in. Okay, next up in the portfolio, another stock that we already owned. It's going to be ticker symbol SO, which is Southern Company, the Southern Company. And we added about $50 worth into the portfolio this time. So Southern Company, we own about 4.8 shares of it at an average share price of $56.49. Currently, it's trading at about $67.26. This stock is doing very beautiful. I mean, look at the dividend. It has a 3.75% dividend, and that's one thing that I've actually been keeping an eye out on. I've been trying to add stocks in the portfolio that have over a 3% dividend or higher. I mean, obviously, not all of these have. As you guys saw, the defense stocks, most of them were very low, under 2% or around 2%. But I'm trying to get more of these higher percentages so I can bring my average up. I believe currently the average for this portfolio is about 3% dividend, which is not bad, but I want to kind of boost that up closer to 4% in total. So as you guys can see, this is obviously a quarterly paying dividend of about 62 cents. In the past year, the stock has done tremendously well. It's went up 20 bucks since the beginning of the year, or 40.5%. I mean, this is a great utility to have in your portfolio. I love the company, long term hold for sure. Okay, next up we have LQD, which is corporate bonds, and it's an ETF. So this one is going to be, I added about $50 worth to the portfolio of this one. And as you guys can see right here, I own about 2.1 shares of this. Average share price $122.38. Currently trading at $128.99. So a lot of people say, oh no, younger people should invest more into these bonds. I've heard some numbers like 20 or 25% of your portfolio should go into bonds. In my opinion, I disagree with that. Bonds kind of, in my opinion, they don't go up that much. The percentage is not that high in my opinion. I mean, as you guys can see right there, it's went up about 13%, in 2019. I mean, it is a monthly paying dividend stock, which is very nice. It pays around 35 cents, 34 cents. The dividend is 3.26%, but the growth is just too slow for me, and that's why I don't have as much, invested into this certain company right there, or this bond ETF, because it just doesn't have the growth that I want. I want something that's going to have better growth, and that's why I just don't have as much invested as I should probably. Next up, we have another real estate investment, which is going to be Store Capital, and I invested another 50 bucks into this one. So same as Realty Income, I added about $50 worth. This one, I own about 14.2 shares. Average share price $35.05. Currently trading at $37.89. So as you guys can see, the growth in the past year is 26%. It's a quarterly paying dividend of about 35 cents currently, and the dividend is 3.68%. Once again, real estate investment company that I believe in. It's a real estate investment trust. I love REITs. I think REITs are on fire right now. And just like like I said, it was at an all-time high at around $40, $41. That's when I saw the opportunity and thought, well, once it comes down here, I'm going to buy some more. And that's exactly what I did at around the $36, $37 area, which is almost timing it perfectly. If this was the low, hopefully it was. I timed it very well. And now I'm going to hope for a run up, and let's break this right here at the 40 area. So let's see what happens with that one. Next up, we have a brand new one to the portfolio. So this is going to be ticker symbol CVX. This is Chevron Corporation. I invested $150 worth into this company. So what this is going to be is right here. As you guys can see, I own about 1.28 shares. Average share price $116.33. Currently trading at $115.58. And now let's take a look at this company. So market cap $221 billion, PE ratio about 16.9. Dividend yield, very beautiful, 4.07%, over 4%. You guys know I love that. So this right here pays a quarterly paying dividend. The stock has kind of been up and down throughout the year. It's only up 4.4%. So, I may be contradicting myself with the bonds saying they didn't go up much, but this one didn't go much, either. But, as you guys can see, a little reading right here, Chevron is an integrated energy company with exploration, production, and refining operations worldwide. Chevron is the second largest oil company in the United States with production of 2.9 million barrels of oil equivalent a day, including 6.9 million cubic feet a day of natural gas and 1.8 million of barrels of liquids a day. This is amazing. That is amazing. And it also has, as you can see down there, in Africa and Asia, which just has more oil there. Beautiful company to own in the portfolio. That's why I added Chevron to the portfolio. And I know a lot of other investors have Chevron in their portfolio, so I wanted to mix it up a little bit. Has a very nice dividend yield of over 4%. Hopefully that can keep increasing. So let's see how this one does this year for me, and I hope it does very well, actually. Okay, next up we added a ticker symbol KO, Coca-Cola, Warren Buffett's favorite stock, right? He gets paid so much, I think millions of dollars actually in dividends from Coca-Cola. Which is insane. I mean, I added $75 worth to my portfolio. You might think this is crazy because Coca-Cola is really expensive right now, but I believe in this company for the long term. That's why I added $75 worth to it. I own about 7.16 shares, average share price almost $52, currently trading at $56.94. If we take a look at the 1 year chart of Coca-Cola, it's up about almost 21%. It pays a quarterly paying dividend, obviously, and the dividend is 2.82%. Beautiful company. In the past 3 years, it's up 37%. In the past 5 years, it's up 31%. But it pays a consecutive, dividend. It's a very beautiful dividend, in my opinion. And I think that this company, they have a lot of new things coming out. You think Coca-Cola, but this company is actually very, very nice. They have, as you can see right here, its portfolio includes a variety of carbonated and non-carbonated brands, including Coca-Cola, Diet Coke, Fanta, Sprite, Minute Maid, Powerade, and Dasani. They have so many new things coming out, this year and previous year. So they have a bright future ahead of them, even though it's such an old company. But it's a beautiful company, in my opinion. Okay, now I know a lot of you guys have this one in your portfolio. Ticker symbol ABBV, AbbVie Inc. So I added $250 worth into my portfolio. This is a stock that a lot of people have in their positions. I don't know why I never added this one in the past, but I finally have added it now, and I own about 2.8 shares. Average share price $88.84. Currently trading at $88, so I'm actually down on that position. But I don't mind. I don't mind at all, actually, with this company because it has a dividend yield of about 5.29%. I think that's one of my highest dividend yields. Maybe AT&T might be higher, I believe, but this is a very high dividend. Obviously, the company only up 2% in the past year. It went down a lot right here. I kind of wish in August, when it was around the $60, $62 area, that I would have actually bought into this company. I don't know why, because look at this beautiful rise back up. So it recovered all those losses. So it went down to $73, rise back up, and now it's currently back to where it pretty much started. And I really wish I would have got into this one. This is, it's a drug company with strong exposure to immunology and oncology. The company's top drug, Humira, represents over half of the company's current profits. And this is very beautiful. I like ABBV, and I just wish I would have added it to the portfolio a lot sooner than I did. But it's never too late, guys, right? And it's a very nice dividend that I hope keeps on increasing. Next up, we have another REIT in the portfolio. So you guys saw I added Store Capital and Realty Income. I added $50 of each. Well, Welltower, I actually added $100 worth. Now this one I own about 4.2 shares, average share price of $82.73, currently trading at $86.39. Another beautiful, dividend, 4.02% over that 4% that I like. The company's done well in the past year, up over 19%. And once again, just like all the other REITs and all the, ETFs that they have, the stock was doing very well at around October, end of October. It was all-time highs pretty much. And then all of these REITs kind of went down. It was down about $77. Once again, I didn't get to time this one perfectly, but I bought about here probably around the $82 range, maybe $81 range, and I added more to my portfolio, to my position. So that's something I'm proud of. I'm glad I'm not buying at all-time highs up here because that would be ridiculous. I'm buying at kind of like a midpoint. This one is it's diversified in the healthcare portfolio of over 1,600 in-place properties spread across the senior housing, medical office, and skilled nursing post-acute care sectors. So that is nice. The portfolio includes over 100 properties in both Canada and the United Kingdom, as the company looks for additional investment opportunities in countries with mature healthcare systems that operate similar to the United States. Now, who wouldn't want to invest into something like that? Next up, we added VZ, which is Verizon. You guys know I love Verizon. I always talk about it, about their 5G race, how they have all this bright future ahead of them. Well, I added $100 more to my portfolio because I like Verizon very much. So I actually added $100, like I said. So I have 6.64 shares now. Average share price $57.94. Currently trading at $60.13. If we take a look here, Verizon has a nice dividend of 4.12%, very beautiful dividend. The company is up 5% in the past year. It pays that quarterly dividend of about 62 cents currently. Once again, I think I bought it at a great price. It was kind of at a low all-time, well, not an all-time low, but a low for the year at around $58. I added more to my position. Now I'm hoping to come back up to this all-time high of about $62 or break through that and make some more gains on this one. Verizon has a lot of stuff coming out. You know, they're in the race to become the best with the 5G, and there's a lot of companies that are racing for that stuff. So I think that Verizon has a very bright future ahead of it as well, and that's why I invested into it. Ticker symbol T. And we added $79 worth into the portfolio. This one was actually at a very high price currently. I own 6.3 shares, average share price $34.10. It's currently at $38.38. This was one of my top gainers. Actually, I believe I was up about 25% on this one or something like that. But I wanted to add more to the portfolio because I think the company is just a very nice company. It's been up 24%, in the past year. It has a dividend of 5.47%. So this is actually my best one. I believe ABBV was the one right behind it. Pays a quarterly paying dividend of about 51 cents, 52 cents right there. AT&T in that race, just like Verizon for the 5G. AT&T has a very good future ahead of it as long as things keep going nice for them and with their goals that they have set already. And that's why I added more to the portfolio, even though it's already at an extremely high price. But I wanted to add more because I know I would regret it if I didn't. And plus, you can miss out on that 5.5 almost dividend yield. That's beautiful. That's bumping my dividend average up higher. All right, the next one is going to be Duke Energy, ticker symbol DUK. So in this one, we added about $50 worth to our position. Duke Energy, a very nice company. Once again, a solid company. I own about 2.12 shares of it. Average share price $88.34. Currently trading at $93.72. So Duke is currently giving a dividend yield of about 4.06%. Very nice. I love the dividend yields over the 4%. In the past year, the company is up about 9%. It's had its ups and downs. It was up about $96. But once again, I bought right here about $91 or around the $90 area in the past week. But it was down here, and I wish I would have added more to the position right there. But I kind of got in. I'm still ahead of the game, but it pays a quarterly paying dividend. Once again, about 95 cents per share. So once again, energy sector, I love it. Utilities, I believe this one's going to be another one that's going to break out this year and have another nice run, just like it did last year right there. And then we have, last but not least, VNQ, Vanguard REIT ETF. So I invested about $50 more into this position. This REIT ETF, I own about 3.89 shares. Average share price $89.24. Currently trading at $94.72. It's actually not showing the dividend right there, but I believe the dividend is, I know it's between 2 and 3%, I believe, but I don't know why it's not showing up on M1 Finance right now. PE, or expense ratio, is 0.12%. In the past year, this one is up about 20%, which is very nice. It pays a quarterly paying dividend of about 7 or 96 cents right here in the last one in December. So that's not too bad. Wow, I was actually wrong, guys. I just looked it up, and it's actually paying out a dividend of 3.73%. Now, that's actually really nice. I thought it was between 2 and 3%, but it's almost at the 4% range. So it just shows you another reason why I own this one in the portfolio. You guys know I love this. REITs are doing amazing. I think they're very, very well done right now. So once again, that's the portfolio, guys. This is what I have. These are the sectors that I have. These are the pies and everything that I have in the portfolio. Every single sector right now is doing amazing. Every single one is up. Tech sector up 33%. Finance 27%. Defense I just added, which is almost 3%. Health sector almost 7%. Utilities 17%. Telecommunication almost 14%. Consumers about 10.7%. Bonds 10%. Real estate, so REITs almost 10%. The portfolio is doing very well. I just added a bunch of money, so you guys can't look at the 7 grand. You got to look at the 5 grand investment because the rest of it was just added recently. But yeah, guys, let me know what you guys think. Do you guys like the stocks that I added to the portfolio, or even the stocks that I actually just kind of, bought more of to invest in the portfolio? And now, before we end the video, I'm gonna actually go ahead and let's take a look at the Dow Jones real quick. Okay, guys, so here's the Dow Jones. Today, actually, we hit all-time highs once again. It's almost at the 30,000. We're really, really doing well. It was up about 50 points today. S&P 500 hitting all-time highs as well. It's actually double what Dow Jones was up today. It was only 0.17. This was up 0.39%. So it's over that 3,000. We're at 3,300 now. Dow Jones doing very well. We were at what, 25,000 last year in the beginning of the year. And then we had some rough spots right here where we went down, but we recovered, and now we're just kind of breaking out since October. We've been doing a nice run up. If we look at the 5-year chart, even better. We just kind of been going up, and right now the bull market, I believe, is very, very hot, and a lot of this trade talk with China is doing very well. We just finished phase 1. Phase 2 is going to start anytime, which means the stock market is not really doing that bad. As long as there's no war or anything like that, we're going to keep on rolling, which is very positive for all of us investors who are invested in the market. So yeah, guys, don't forget to smash that like button for me. Make sure you subscribe to the channel for that giveaway at 5,000 subscribers. Leave a comment below what you guys thought about this portfolio of mine on M1 Finance. Let me know what you guys think. What stocks should I get rid of if you guys think there are any, actually, which I don't believe there are any in this portfolio. Let me know what I could be adding to the portfolio. One stock I believe that I wanted to add but I didn't was ticker symbol GAIN, GAIN. I wanted to add that to the portfolio but I didn't. Maybe in the future. Let me know what you guys think about it in the comments below.